Hello and a warm welcome. You've joined us on All About Your Company right here on ET Now. I'm Ashesha Adwaryu, and today on the show we are going to put the spotlight on the only copper miner in the country, a company whose stock has run up nearly 50% in the last 1 month and has more than doubled on a year-to-date basis. Yes, I'm talking about Hindustan Copper, and the stock is surging on the back of surge in copper prices in the global market. We will have an analyst joining us on the show to decode what the outlook is for the company going forward. But let's talk about the key talking points that we are going to discuss on the show today and what led to the up move in copper prices, whether it is sustainable or not. All that and more coming up for you in just a bit. Is this up move in stock only led by surge in copper prices? That's the biggest question that we'll try to answer from Parthiv Jonsah of Anand Rathi Institutional Equities. He will be joining us in just a bit, but this is the biggest question that we will try to answer. But apart from that, it also has aggressive capex plans. Are they realistic? Is the run in copper overrun? As I mentioned, copper prices have shot up exponentially. It has now crossed that $11,500 per ton mark in the global market. Will they cool off in 2026? That's the second big question that we will try to answer over the course of the next 20 minutes. As I mentioned, they have aggressive capacity expansion plans. They're aiming to increase their capacity by 3.5 times to 12 million tons by FY30. Is this a realistic target? This is also a big question. Remember, they have not been able to achieve their target in the past, and hence this is an important question that we need to ask the analyst. But apart from that, remember, debt is not a concern, but they have aggressive capacity expansion plans. But will this capex then hinder their deleveraging roadmap? Because currently debt is not a problem. Net debt or gross debt has been declining over the last 3 to 4 years. So we will talk about their capex plans and the deleveraging roadmap that the company has going forward. That's the fourth big question we will try to answer. But apart from that, as far as valuations are concerned, does it look expensive? Remember, as I mentioned, this stock has nearly doubled on a year-to-date basis. So has the stock overrun, and do you think the valuations are now unreasonable? That's the big question. We'll try to discuss all that and more in just a bit. But first up, let's talk a little bit in detail about the company, what it does, and the kind of products that it offers in the domestic and in the global market. Remember, it's a Mini Ratna Category 1 CPSE with a market cap of about 46,000 crore rupees. The stock is up 4.5% today, and as I mentioned, it has more than doubled over the last 1 year. It caters to several industries, and we'll talk about that in a bit. It was set up in 1967 with 100% Government of India ownership. That has now fallen to about 66.1%. But remember, government has maintained its shareholding at that 66% mark for the last several years. There has been no change in the shareholding pattern, especially when it comes to government shareholding over the last few years. So yes, it's an old company. Government of India holds majority stake. It's a sole vertically integrated producer of refined copper in India. It is the only vertically integrated copper mining company in India, and that is what makes it very special. That's as far as Hindustan Copper's operations are concerned. It has facilities of mining, ore beneficiation, smelting, refining and extruding. These are the major operations that it caters to, and we will talk about the capacity expansion plans that it has in each of these segments in just a bit. So these are the facilities that it caters to. It owns all the operating mining leases of copper ore in India. So that's about the company. Let's also discuss the surge in copper prices that we have seen of late. Remember, it has access to 45% of India's copper ore reserves. Although India, as a percentage of global copper industry, does not own as much copper, and we'll talk about that. But this is the world copper resources and reserve structure, and this is how it looks. So the total resources in the world stand at about 5,600 million tons, out of which identified resources stand at 2,100 million tons. Reserves are 1,000 million tons, mine capacity at just 28 million tons, which means that we still have mining capacity which is left to be exploited explode over the next several years, and the mine production global capacity stands at about 23 million tons. So that's how the world copper resources and reserve structure is actually positioned in the global market. What does this mean for India, and how is India positioned in the context of this? Let's also understand that. Chile, remember, is the biggest producer, and it has the most reserves of copper in the global market at 19%, Peru at 12%, Australia at 10%, and India, remember, just has a small percentage of total global reserves at just 0.2%. But despite that, demand in India continues to remain resilient. But as a percentage of copper reserves, India just has 0.2% of the global copper market. So that's how India is positioned as compared to the rest of the world. Let's also talk about Hindustan Copper's positioning in context of the kind of reserves India has at total. Now remember, a total of India has about 1660 million tons of resources, out of which Hindustan Copper has about 755 million tons, which translates to a solid 45%. This clearly means Hindustan Zinc has solid positioning in the copper market in the domestic market. As far as copper reserves are concerned, Hindustan Copper has 98% holding in this. The total reserves in India stands at about 164 million tons, and Hindustan Copper has 98% of which stands at about 160 million tons. So Hindustan Copper clearly has a hold in domestic copper market. So that's how the copper market is structured, both in the global market and in the domestic market. Now remember, as far as per capita consumption is concerned, India is at just 0.6 kg per person, which is far lower as compared to the world average, which stands at about 3.2 kgs per person, and that is the reason the outlook is very positive, and most analysts expect the copper consumption in India to rise going forward and to become at par with global average. So that's as far as the per capita consumption of copper is concerned in India versus the global average. Now, Hindustan Copper, remember, makes copper concentrate. It makes wire rods. Copper concentrates, of course, are used in smelting and refining, and the wire rods are used in winding wires and strips. Let's also talk about the consuming sectors, the sectors that consume the products that Hindustan Copper makes. Building and construction, which stands at 24%, infrastructure at 19%, industrial at 17%, transportation at 11%. These are the major four segments which consume refined copper. So these are the segments which are consumers for the kind of products Hindustan Copper makes. So any impact, any changes in these sectors directly weighs heavy on demand of copper in the domestic market. Let's shift focus to financials then. Remember, Hindustan Copper generated revenue of about 1800 crore rupees in FY21, which steadily rose to 1822 the year later, and in FY25 it stood at about 2071 odd crores. This, remember, is despite the volatility that we have seen in the copper market, and Hindustan Copper, being a cyclical business, varies greatly on the kind of moves that we see in the copper market in as far as the global commodity price up move is concerned. EBITDA, meanwhile, also nearly doubled from FY27, which stood at 411 odd crores. It now stands at about 750 crores. This is the FY25 figure. Moving and shifting focus now to EBITDA margins, then they have remained steady and have grown over the last 5 years from 23% in FY21 to about 32% in FY24 and a solid 36% in FY25. In fact, we'll try and ask this question to our analysts as well as to what led to the kind of up move in EBITDA margins that the company has reported. Profit after tax stood at 110 crores in FY21 and shot up to a solid 470 crores in FY25. So financial trend, despite the cyclicality that the company operates in, looks very solid. Let's also talk about the first half performance this year so far. It has generated revenue of about 1234 odd crores versus 1000 crore that it reported same time last year. This of course is on account of surge in copper prices that we have seen globally. EBITDA margins have also expanded. In fact, they've contracted a tad bit. They've come in at around 40%. And PAT, meanwhile, stood at about 320 odd crores. This is first half of FY26. That's the half-yearly picture for you, basis the kind of performance that it reported in the first 2 quarters of this financial year. Shifting focus to copper prices then, and as I mentioned, one of the reasons of up move in the stock is on account of surge in copper prices. That's the chart for you. Copper prices have risen 39% on a year-to-date basis. It is from about $8,800 per ton that it was at the start of the year. It has now risen to about $12,200 per ton. That's the kind of up move that we have seen in the copper prices, and we'll also try to decode whether this is sustainable or perhaps copper prices could cool off in calendar year 2026. One of the reasons of a surge in copper prices is new age application of copper, one in electric vehicles, in AI-led data centers, advanced manufacturing. These are some of the new age uses and use cases of copper, because of which copper prices have risen in the global market. Let's also talk about capacity expansion roadmap that Hindustan Copper has. In FY25, that's the financial year just ended, their capacity stood at about 3.5 million tons per annum, and the company is targeting a solid 12 million tons per annum capacity by FY31. So clearly, the roadmap is very solid. Management is very confident of achieving this target, despite having reported very muted capacity expansion over the last 5 years. The management is very positive on the outlook going forward. So that's the capacity expansion roadmap that the company has over the next 3 years, where they are aiming to increase their capacity by nearly 3.5 times. Gross debt, meanwhile, has reduced over the last 5 years, which is again a positive. Debt stood at about 1564 odd crores in FY21, and it has come to just about 160 odd crores in FY24. So debt clearly is not a concern for the company. In fact, most analysts believe that it will be funding their capex plans through internal accruals, and hence debt is not likely to be a problem going forward as well. Let's talk about valuations then. It trades at about 17 times FY28 EV to EBITDA. We'll try and get this question answered from our analyst of whether it is sustainable, or does he perhaps believe that the stock has overrun and the stock looks expensive now. Shifting focus to the shareholding pattern then, and as I mentioned earlier, government shareholding stands at 66%. It has remained steady over the last several years. FIIs hold 5%, DIIs at 6%, and public shareholders hold the balance 23% in the company. Lastly, let's also put the spotlight on the valuation metric. Financials is a positive. It has reported solid growth over the last few years. Capex, it has aggressive capacity expansion plans. Gross debt is not a problem because they've lowered their debt substantially over the last 5 years. As far as valuation is concerned, 17 times looks a little expensive. We'll try to get answers to that question. And shareholding pattern has also been rather steady over the last few years. But to understand this in greater detail, we are now joined by Parthiv Jonsa, Vice President at Anand Rathi Institutional Equities. Mr. Jonsa, afternoon, and thank you so much for taking your time out and joining us here on ET Now. And the first question has to be with respect to surge in copper prices. And now that the stock has doubled on a year-to-date basis, do you believe that the up move is only because of the surge in copper prices, or is there any other fundamental reason which is leading to this?
Hi, good afternoon. Thanks, Ashisha, for having me. It's not purely because of the movement in the copper prices. Yes, copper price movement definitely matters a lot. Copper LME touching a $13,000 level definitely has helped the company to catapult as far as the stock prices are concerned. But however, it's just not a function of LME. The company themselves have actually extended a lot of leases, and even if you see the volume data over last maybe 4 or 5 quarters, they have consistently increased their concentrate volumes, and that is what matters the most, right? It's not just a matter of your commodity; it's also commodity to an extent your forex, rates, and also the volumes going up. If you see, the volumes have consistently increased, say from Q1 of 24 or 25 onwards. The volumes have consistently increased. Number one. Finally, all the leases have been extended. So you have a certain roadmap even till 2030, 31. Your LME has been sustaining purely because of supply crunch globally. All your major geographies like Congo, Peru, Chile, even Indonesia, a lot of disruptions are there. You have disruptions, you have strong demand, and you have an extension in leases. So all these factors put to combine has led to the stock price rally in recent times.
Okay, but one of the factors, as you mentioned, is the surge in copper prices. We'll talk about their production uptake and capacity expansion plans in just a bit. But solely based on the surge in copper prices, do you believe that copper prices will perhaps cool off going forward in the near future, say in the next 3 to 4 odd months?
See, if you see copper prices as a concept, right? there has been many supply crunch globally. A lot of mines are out. Even if you want to develop a greenfield mine, you take almost about 12 to say 17 years kind of a time frame globally, right? The fastest mine to develop is in Africa, which still takes about good 5 6 years. The average timeline to develop a mine, which is a greenfield and a brownfield put together, the blended has actually gone up over last 10 years. 10 years back, it was say 9.97 years. Today, it's about 10.5, 10.6 years, give or take, right? So your timeline to develop a mine has gone up. Your copper grade, which is there, has actually gone down over the years. So, and plus your demand is growing up. So your next leg of 10 million tons, 10 million ton of demand is going to come up from these new age sectors like EV, renewables, your AI data centers, and so on and so forth. So all these factors put together will definitely keep the prices elevated. Whether the prices will be elevated at 13,000, 13,500, that's a separate question mark. But yeah, definitely the prices over what we believe is the prices over 10,500 to 11,000 is sustainable in next 4 to 5 months kind of a time frame.
Okay, so you expect the prices to sustain going forward, and you're not expecting a major correction in copper prices, at least in the near future. We did talk about production and capacity expansion plans, so the next question has to be on that. Company is aiming to reach capacity of about 12 million tons. This is by FY31, 3.5 times more than where its capacity currently stands. Because of the kind of performance that it has reported, I believe the management had in the past also laid ambitious targets, but it failed to achieve that. Do you think this time this target is achievable?
See, mine lease extension is not a simple cakewalk, right? It requires a lot of regulatory approvals. It takes time in that. I believe that the management in the past had set a certain timeline and it's been extended. But now, finally, if you see all the leases across Rajasthan, Jharkhand has been extended. All the 7 mine leases have been extended till say 2040 to 2043. So we have ample of roadmap left. We have been to the MCP mine, which is the flagship mine. We have seen the progress there. We are very confident that the company will achieve the volume growth going forward. You need to, there are multiple things to look out for. It's not just not the ore volume, it's also the grade. If you move underground, the grade also starts improving, right? So all these factors will help the company to make higher concentrate volumes going forward. We are definitely confident that once, as these leases have been extended, the company has laid out the roadmap for next 5 to 7 years, bare minimum. Also, a 12.2 million ton also comprises of a 3 million ton kind of a thing from the MDO. Even if you exclude that, it's a 9.2 million ton on its own books. So you have a substantial roadmap at the existing mine itself. So 12.2 is a cumulative capacity of ore.
And Parthiv, can you quantify that for us? Because of the capacity expansion plans that you're saying is because of the lease extension, what kind of production volume growth are you penciling in for the next 3 to 4 odd years?
So this year, that is the current FI, we are targeting a ore volume of 3.9. And last year they did a concentrate equivalent of 0.7. We are targeting a better concentrate volume this year. So as far as concentrate volumes are concerned, we are targeting a 30,500 tons of concentrate volumes. Next year, whatever the management has given, we are confident that the management has laid out the roadmap. Those roadmap will be achieved, eventually taking it to 12.2 in FY 3031. And as far as the cumulative concentrate volumes are concerned, we feel that it will cross 1 lakh tons by 2030-31. So you have almost about four. So they did 25,000 tons of concentrate volume last year. So it's actually 4x from FY25 level.
And consequently, how much revenue and EBITDA growth could the company report? What is your model suggesting when it comes to revenue and profitability growth on a CAGR basis for the next 5 years?
See, as far as your revenues are concerned, you expect a revenue CAGR of say about 25%. However, as far as the EBITDA or profitability is concerned, it will be better than the top line, because what happens here at the end of the day, copper is element driven, right? So your revenue is in dollar terms. So with say rupee depreciating or the LME going up, you have an advantage there, whereas your costing is all in INR terms. So where your revenue is growing at 25%, your EBITDA can grow at 27, 28%, and similarly for bottom line. So we are factoring in a better EBITDA number, and this is after assuming that there will be a wage hike coming in next 2 to 3 years, right? You require more manpower for a higher volumes. So all these things have been considered, and then still it works out to a good 27-28% of an EBITDA CAGR over 25 to 31.
Okay, so 25 to 28% EBITDA PAT CAGR is what you're penciling in for the next few years. But since the company has aggressive capacity expansion plans and the company has consistently managed to lower its debt over the last few years, do you believe capex will be fully funded via internal accruals and that it will not have any impact on their deleveraging plan?
See, as far as your net debt is concerned, the any which is negative, right? So you are basically cash positive as far as your net is net on a net business is concerned. We are definitely sure that all your internal accruals would be suffice to basically expand the mines. If you see the per ton capex, because once upon a time these mines were operationalized, then you had some regulatory issues, and now again you have a mine extension, these extension which has happened. Your per ton capex to develop those mines is substantially lower than the global standard, and we strongly believe that your internal accrual is more than sufficient to basically catapult the capacity almost 4x from what it was in 2025. So the company has clearly laid out the roadmap. Considering your LME at 12,000, 13,000, you have ample of headroom to do it from internal accrual.
Okay, so the company will be able to achieve its capex through internal accruals, and debt, which of course the company is a net cash company, will not be impacted on account of capex plans that the company has. But Parthiv, let's also talk about the capacity expansion plans and its impact on debt. But other than that, what kind of impact are you expecting of copper prices on the financials of the company? If at all the prices were to decline, will that have any impact on financials?
Considering your USD INR stable, what backward calculation or what sensitivity we did was every dollar increase or decrease of the LME has almost say about good between the range of say 45 to 55 lakh rupees of an impact as far as your top line and EBITDA is concerned. So right now, for assuming if the LME is going up say by 100, you basically multiply by 55 lakh rupees per dollar basically. So that is the kind of a sensitivity what we have built in our model at the end of the day. So definitely, right now, what the price have gone up, your average prices for 26, but when we came out with initiating coverage was different. Now it's different. It has substantially improved from there on, right? So it will definitely have a positive impact. But definitely, if the prices cool off, it will have the reverse effect as well. But on a long-term basis, we are very confident that 11,000 kind of a LME is easily sustainable, considering a lot of these mines take another 2 or 3 years to come on stream. Even if you see Grasberg, which went on a couple of months back, they have clearly stated that they'll be on stream by mid of next year. A lot of mines in Africa or Latin America, they will be where the disruptions have happened. They have clearly indicated that they'll take 6 to 8 months to come on stream, and they have actually reduced their current year and the next year guidance. So very confident that the prices will remain elevated.
Okay, and what is your view on the valuation that the stock is currently trading at, and what do you compare the valuation with? Is it historic average or any other peer in the global market? Because I couldn't find any direct peer, at least in the domestic market.
You're absolutely right. There is no other copper miner in India. You, as a copper, as an ecosystem, you have a couple of companies apart from Hindustan Copper, but they are on the downstream side of the business, right? So that's a different story altogether. So the only way to compare the valuation is to compare with the global counterparts. Even if you see the global counterparts over last 12 to 18 months, they all got re-rated. Whereas the 1 year forward or 2 year forward, your EV EBITDA was say about 5-7x. It has all gone to 10 and 12x right now. Even if you see Hindustan Copper, it's about 15-17 multiple, give or take. But it is not that they are way off than the global peers, right? Number one. A lot of global peers, whether it's price to earning, EV to EBITDA, price to book, they're very well on track with a lot of these global majors, whether it be Ivanhoe, Southern Copper, and so on and so forth, right? So they're not at all off. Even if you see the return ratios of Hindustan Copper, they're much superior than your global peers or global counterparts. Your EBITDA margins are much superior. So all the things also matter. Plus, you are the only company in India. You definitely get a premium to the other miners of an equal globally. So all these things matter. We don't feel that the valuation is really off. We are very comfortable with the valuation, with the current valuation.
Okay, so very comfortable with the current valuation. But one last question before we let you go. What will your view be on the stock be? If, for example, if I want to invest in Hindustan Copper at this point in time, I understand you cannot give us a target price, but directionally, after the kind of run-up that we have seen, would you still prefer entering into this stock?
See, globally, if you see, and this particular counter is more from global perspective. globally, if you see, copper crunch is going to remain. Your average timeline to develop a copper mine is 15 to 17 years for a greenfield. Your demand from EV, AI data centers, your electronics, housing, infra is all going to remain very robust. Your 25 million ton of a global demand is going to grow to 35 million ton. The incremental 10 million ton is going to come from these new age sectors. The domestic demand of copper is going to go 2.5x, right, in next 10 years. So what you just said in your opening remark that we are 0.6 kgs per capita, we'll be going to a global. That is definitely for sure, because as your EV penetration happens in India, as you move towards data AI centers, as you upgrade your grids, a lot of things purely is driven on copper at the end of the day. So we are very confident that directionally it will definitely keep on growing. Now, finally, with all the leased extension happening, the company finally laid out all the roadmap. We are very confident that the company will achieve that volume going forward. That's not just one part. The other part is also that the concentrate volumes will also increase, because your grade of copper will increase as you move underground. For example, in FY25, it was 0.7% grade. We expect that to go to the rated grade with the company has said of 0.95. So from 0.7 to 0.95 over the next 5 years, also substantial increase at the higher ore, right? So all these things will matter at the end of the day. So we are very confident on the entire story of Hindustan Copper.
Right, so the outlook on the company continues to remain very positive, and the management itself is also very positive when it comes to their capacity expansion plans. Parthiv, thank you so much for taking your time out and joining us here on this special edition of All About Your Company. That's all the time we have on the show. Don't go anywhere. More news and updates will continue on the other side.